Bitcoin's price cut in half from its all-time high, and some of Bitcoin Twitter is in panic mode. I'm Natalie Brunell for Bitcoin Magazine with a quick check on the price action. First of all, if you're new to Bitcoin, volatility is something you will have to learn to stomach. This isn't a short-term investment. Bitcoin is for those of us with a time horizon of 4 years, 10 years, a lifetime. And if you zoom out, number go up is the big picture performance over the last decade. In fact, Bitcoin is the best performing monetary asset of the last 10 years by far. But understandably, when it draws down 50% and possibly more, it has a lot of people on edge. So what's the reason for the price dump? First, let's remember Bitcoin is not operating in a vacuum here. Everything is down. Stocks are down. Gold is down. Silver down. Other cryptos and foreign currencies are down. And people are worried about the Fed's upcoming decisions on possible interest rate hikes, which is sending asset prices cascading downwards. So far, the mere utter of the hikes happening this year is sending markets into the red zone. The NASDAQ, for example, tumbled 11% so far in 2022 and experienced its worst week since 2020. Tech stocks are getting hit hardest. And of course, the very new, very liquid digital assets like Bitcoin are selling off as well. So why is everyone in panic mode across the board in the financial markets? Well, the Fed is essentially backed into a corner after printing trillions of dollars in response to the pandemic. Now, one direction is, of course, hiking rates to combat inflation, which crashes the market and starts to wash out leverage, malinvestments, and makes it harder to pay back debt, including the debt our government funds itself with. The other direction is more inflation, which would increase the cost of living for those getting slammed already with stagnant wages in comparison to inflation as prices rise for everything from groceries to gas to housing. So what will the Fed do? It's unlikely they will be able to meaningfully raise rates to a level that can actually fight the inflation. But can they get a few basis points in? Will the markets continue to be fearful and fall? People are pretty much 1 foot in, 1 foot out. So we will have to see. But again, let's remember the big picture here. Return on investment over the last 10 years. Bitcoin has appreciated more than 500,000%. The S&P 500 went up about 230% in the same time, and gold is up just 10%. Sorry, Peter Schiff. Drawdowns are not new to Bitcoin. In the last 4 years, Bitcoin has dropped 50% 4 times. And last year, there were multiple times it dropped at least 20%. Its biggest drawdown was in 2017 when Bitcoin dropped more than 80%, yet it always recovered to make new highs, even if those took longer than Bitcoiners hoped or expected. So remember, Bitcoin is up nearly 1,000% since its March 2020 lows when the pandemic crashed the markets. And even though we're in a correction, Bitcoin's hash rate is at an all-time high, and the number of Bitcoin addresses on chain is also at an all-time high. So people are buying. The underlying fundamentals are strong, and the thesis has not changed. The Fed is trapped. The pressure is on. High volatility assets will be tested. But in the long run, we hold because we know the one thing that can protect us from the mess of the old system is a new one based on hard money. For more headlines, head to bitcoinmagazine.com.